Hi, ladies and gentlemen, and welcome back to another session with Axis Mutual Fund. I'm Siddhant Oberoi, your host for today. Now, I have a very special guest for you today, and that's none other than Mr. R. Shivakumar. Shiva comes with an experience of over 25 years in the EMC space. He is an alumni of IIT Madras and IIM Ahmedabad, and I think, I don't need to introduce him any further. Our regulars know him probably more than that. So without further ado, we are going to discuss a very interesting theme today, which is our latest passive fund, Axis BSE India Sector Leaders Index Fund. This is, I think, our 39th or 40th index fund that we launched at Axis, and probably continues our trend of launching a new passive fund every second month. Just goes to show why this is an important category, and we want to get our investors aware about passive investing. And we hope you learn a lot from this session. Let's get right into it. So Shiva, this is quite an interesting topic we're discussing today. What do you mean when I say sector leaders, or how are our investors supposed to understand the definition?
So the interesting thing about markets is when we look at markets, first of all, let's understand what it is for a stock to be a leader or a laggard or whatever, however you want to define it. It's not about leaders and laggards, really it's about the size of the companies which are listed. There are some companies which we understand as so-called large cap. These are large capitalization, which means the bigger companies on the exchange. And there are others which are mid and small, etc. When we talk about sector leaders, we have to ask two questions. What is a sector and what is a leader, definition of a leader? The sector definitions are handed down to us. There is a process, there are standards bodies, including the AMFI, which are involved in classifying sectors. There are 21 sectors that we have identified in the BSE 500, which is also part of this sector leaders index from the BSE. The second question is on leaders. What we understand by leaders and what the exchange identifies as leaders are the top 3 companies in each of these 21 sectors. So in essence, what you're getting is a list of 63 companies which are classified as sector leaders, meaning a combination of 21 sectors and 3 leaders per sector.
All right. So let's probably break down this definition. How much of we understand overlaps are also, more and more of our customers are now more aware about overlaps. They're more looking at it both from an active and a passive allocation perspective. How much of an overlap does the BSE 500 have, say, versus the Nifty 50?
An interesting way to look at it is to look at just the large cap composition. And Nifty 50 is pretty much by definition a large cap index. What we mean by large cap is typically the top 100 listed companies. So the 50 of that are all large caps. When you look at a 500 index, like a BSE 500 or a Nifty 500, then obviously you're going to get 400 of them at least which are not the top 100 stocks. So which means there are some mid caps and small caps also in that. But because the large 100 companies are the large 100 companies, they don't actually account for just 100 out of 500 or 20% by weight. They account for something well over 70% by weight in the index. So therefore, even for a so-called diversified index, you typically find that well over 70% of the weight in that index is still large cap.
Right. So does that also therefore go back so from an investor's perspective, does that not add a layer of stability to an investor's portfolio? So for example, the last year we've seen has been extremely volatile, and with recent, say, potential tariffs and the tariffs that have already been implemented, geopolitical instability, etc., how do large caps therefore help stabilize a portfolio?
It's very interesting. I mean, if you look at the last year, calendar year 2025, large caps as represented, let's say by the Nifty 50, were up about 10%. The median stock in the 500 index was down more than 3%, which is the midpoint, which means half the stocks fell, even more than -3, -4. Which means the market was not broad. It was very narrow, and the winners were really the larger companies at a sector level or at an overall market level. This is typically what happens when there is uncertainty in the market. Now, uncertainty, you brought out one topic of uncertainty, which is on account of tariffs. But the markets have been grappling with other issues too. Coming out of the fact that we have seen relatively low nominal GDP growth. We have had fantastic real growth, but we have had low inflation, which means the nominal GDP growth in India is now running in single digits. Why is that important? It's because corporate earnings, growth, all of that comes from nominal, not from real. Right? So we have relatively low nominal GDP growth. This is part of a cycle. It's not to say that nominal GDP growth will be slow from here on. But we've had a period of time when growth has consolidated. We've also had heightened uncertainty because of global geopolitical events. The combination of these has meant that investors have chosen to stay in relative safety. The safety which is there in larger caps, the safety which is in the larger well-established companies, as opposed to taking risk in mid-caps and small caps. To my mind, that explains why the market has behaved like this over the last year or so.
Right. And I think what's also interesting to see here is that the sector leaders index has both a floor and a ceiling in terms of weightage.
Yeah.
So therefore, while it is a large cap bias, but we're limiting the maximum weight to 5%.
Yeah.
What are your views on that? So how is that beneficial to an investor?
Yeah, so that does diversify the portfolio. If you were just doing, let's say, an index which is, let's say, the largest 60 odd companies and just weighted them by market capitalization, how different would you be with respect to Nifty after all? So the key differences come down to a couple of points. One, by keeping a floor and a cap, you ensure that all sectors get fairly represented. So relatively smaller sectors also have some reasonable weight in the index rather than it being a vanishing tail. Second, by capping the upper side also means that instead of having single stocks which are 10% or even more of a large cap index, for example, here you are ensuring that no single stock becomes a uncomfortably large position of your portfolio. So it is more diversified than a large cap portfolio. It is large cap bias, more than 80% of this index is large cap, but it is not as concentrated as a large cap portfolio. This same concentration also applies at a sector level. In India, financial services is a very large part of our market. 30 to 35% of index weights, if you take a BSE 500 or a Nifty 50, 30 to 35% by weight is just financial services.
Right.
And in this index, it's less than 14% by weight. So effectively, not just stock level diversification, but also sector level diversification is better here.
Right. So sure, I think while we're getting into the nitty-gritties of this index, let's understand what does it take for a company to become a sector leader. So what goes into making a leader?
See, the thing is, in this is very simple. It's the largest up to three companies in a sector, right? So which means these are well-established companies within their relative sectors, which have shown some kind of growth, some kind of resilience, some kind of profitability track record, so that the market has rewarded them to become relatively large in their sectors. So that's the starting point. The starting point is we are taking the market's expression of leadership. We've also looked at such a passive index that there is no churn, meaning that if it's the same companies which are held for a long period of time and there's no fresh blood in the index, where are we getting exposure to new companies, new ideas, new growth stories?
Right.
So at once we want to see the kind of resilience and strength coming from leadership, but also you want to see fresh blood. So over the last 10 or 15 years, what you see is about 1/3 of the components of today's sector leaders index were also present 10 to 15 years ago.
Wow.
And 2/3 have churned over, which means you're getting a combination of both sort of leaders who have persisted for more than a decade, but also you've not missed out on a lot of opportunities which have come along the way in the last 10 or 15 years.
Right. Yeah, and I think that's probably, and I'm assuming this is the trend is going to continue in the future as well, right? You have a lot of these internet-based companies or companies which are now unlocking the potential of AI, so we're probably going to have this reconstituted in a few years again.
So it is, it's what the market says it is, right? So effectively, if, for example, platform companies or internet companies or data-oriented companies become larger in the future, they will find a home in this index. But they also need to be top 3 in a relevant sector. For example, within IT, for example, if the top 3 companies are IT companies, right? But you expect that in consumer services, the top 3 will be consumer services, or in retail, top 3 will be retail. You cannot say that suddenly just because of data or AI or something that everything should be replaced. So one thing is you need to also understand that diversification is part of the story here. We do not want thematically biased index, at least in this case.
Right. So Shiva, let's also probably do a slightly deep dive into the sectors. We mentioned that this has leaders from all 21 sectors. So maybe if you could spend a couple of minutes in just explaining maybe the top 2, top 3 sectors. So we briefly discussed financials. IT also is one of our largest exports. Yes. So what are your views on these 3 sectors? Where do you think they're headed?
IT is very interesting. Obviously, global trends matter a lot for IT companies. IT is also has not been subject to tariffs, etc., because tariffs are applicable on goods. So while of course the global trends do matter for IT companies, they are not so affected by the tariffs and other geopolitical issues. They have of course been affected by the AI cycle, which most Indian IT companies have stayed out so far, or have not benefited from the AI cycle so far. So yes, we should see that change in the coming years as AI sort of takes root in Indian IT too. Financial services is very important. It is, while the weights of financial services in this index is lower than that in Nifty 500 or a BSE 500 or in fact on Nifty 50, it is still over 13%, close to 14% of the index weight, and therefore it is an important part of this index. So a few top sectors will matter. But I think the interesting thing about this fund is that it is not biased towards the top sectors.
Right.
If you take the same top 2 or 3 sectors in a more narrower index or just a capitalization weighted index, the top 2 or 3 sectors themselves will account for more than 50% of the weight.
Right.
And here clearly it's not the case. It's much more diversified. So the index construction takes you away from stock or sector specific risk and to a more diversified basket.
Right. So, sure, that actually brings me back. I'm going to rewind every now and then. I apologize for that in advance. But fundamentally, we've seen that there is a surge in the demand for index funds by our investors and by the industry across. What do you think is pushing investors towards index funds now? I think we've spoken to a few customers. What they've said is the simplicity is what attracts them towards indices. What do you think? What is the essence of an index fund?
I think yes, simplicity, but more importantly transparency, because the index constituents are well known. On the date of investing, you know exactly what your constituents are, what your weights are, and many investors like to see that. What exactly is the portfolio that they are investing in on the day of making an investment decision. Most of the time, in fact almost all of the time, index constitution is a formulaic or based on predetermined methodologies, which also means there is less uncertainty around future constitution of these indices. So for all of these reasons, there is a lot of comfort that investors derive simply from the fact that the index constitution methodology is different from just plain stock picking. So both have their position in portfolios. Fund managers who are doing fundamental analysis and picking stocks are obviously driving for alpha, which means relative performance to an index. Of course, the index gives you just index returns.
Yeah.
And index providers also are trying to innovate and create new indices which have differentiated performance with respect to just a large cap diversified index. So we have both of these trends at play. It's good time to be an investor today. Rewind a few years ago or a decade ago, the choices were much more limited. Yeah. Today, there is a lot more, and you can play specific themes, even index fund within certain specific themes or sectors which were not available previously. So I think there is a wider variety of offerings today, which makes sense from an investor perspective. Of course, it also means that sometimes it is very confusing to pick and choose among so many options when it comes to both active, passive, types of index, thematic, and so on. So as always, we would urge you to please consult your financial advisors. Please do your research before making investment decisions.
Yeah, thanks for that. It's a very interesting stat that comes to mind. I remember reading somewhere that in 1999, India had only 10 index/ETF products available from an investor perspective to purchase, which has surged to about 449 as on 31st of December 25. So that's phenomenal, right? Like
I am surprised that there were that many index products 25 years ago. Yeah, that is quite a surprise. Yeah. Yes, I mean it's possible that there were index funds, and I've been in this industry since the late 90s, and let me tell you, nobody was talking index funds then.
Yeah. So sure, you know what this brings me back to. Let's come back to the topic, right? So sector leaders. We've discussed what a sector leader is, how the index is created. We've discussed how there is an overlap with the traditional Nifty 50. We've discussed how this is traditionally a large cap oriented fund. Let's now look at what is the right allocation for this product. Do you consider this being a core investment, or should this be a satellite to an investor? Let me also layer that question slightly. We've seen that more and more investors are now getting into SIPs, and there is a focus towards longer term goals and investments that are being tagged specifically to life goals. I'll take another couple of seconds. So we've seen customers say that, oh, I want to say start an SIP to buy 1 kg of gold in X number of years, or I want to buy say an SUV, or I want a healthy down payment for a house in a few years, etc. Where do you think this sort of strategy gets into a portfolio? If you had 100 rupees to invest, would you rather let this be a core or a satellite?
I think there is a strong argument to be made for a fund like this to be part of a core allocation for an investor. As I said, I would not be very, if you look at the basket and look at sector funds, thematic funds, and diversified, it always makes sense to have diversified portfolios in the core and the more thematic sectors as tactical add-ons whenever you kind of want to play a theme or a sector. Here you're not taking a sector view, it's very, very diversified. So from that perspective, it certainly can fit a core portfolio. Now, how much weight would you give a fund like this versus an active fund, diversified fund, and let's say a market cap based index, etc.? That's up to every investor, and there is no one formula for that. But certainly, it can fit a core part of the portfolio. But the question then comes back to your other part of the statement, which is about life goals and horizons. And I think that needs to be kept in mind, because as with most equity products, taking a very short-term horizon just means you're exposing yourself to market volatility. Last year being a classic example, where a large part of the index went, a large part of the market went negative, even if not the frontline indices. So take a medium-term view, take a 3-year, 5-year plus view when you're buying any equity product, and you are likely to be served well. And that's also a time horizon for this index to have performed well in the past. When you look at this index, I don't really want to look at 1-year holding periods, but if you look at 3-year, 5-year kind of holding periods, rolling returns, there is somewhere close to 100 basis points. So let's say between 50 to 100 basis points or 70 to 100 basis points outperformance relative to, let's say, a Nifty 500 in a sector leaders fund or a sector leaders index. And this is history. Obviously, the fund has not been there in the past, so there's no way to have made that investment in the past. With that caveat, that is interesting. That with you're actually almost buying from the same set of stocks, right? The sectors, the 21 sectors which are in this index are the same 21 sectors which are there in the BSE 500 or. So how is it that this is able to deliver consistent outperformance over 3 or 5-year rolling periods? And I think that's the real message of this, that leaders have shown that kind of outperformance over a medium term meaning 3-5 years. So at least have that horizon when you're making an investment decision here.
So that actually makes a lot of sense, because like our house view is that an investor should stay invested for as long as possible. Yes. So I remember looking at some data internally that if an investor would have invested 1 lakh rupees say in September 2005 in this index, had this index been available back then, this would have grown about 16.6x. So 1 lakh would have become about 16.5 lakh rupees. That's a lot of money. So going back to a few queries that we had, I have this goal, I have that goal. Imagine potentially holding this fund for another 20 years. You never know where it ends up. Yeah,
and I think that's absolutely a fair point. Obviously, there's no way to replicate this because this index was not there 20 years ago. This fund was not there 20 years ago. So obviously, that needs to be kept in mind. But the concept would well have been replicated by buying larger companies 20 years ago, and I think it might have worked, might have done investors good in hindsight. I think there is a case for having a large cap portfolio in your basket, like I said, a core diversified portfolio. I think it makes sense to still have that regular allocation, yes.
Yeah. All right. So I think, Shiva, I won't trouble you too much. I know I've taken up a lot of your time, but last couple of questions, and we'll try to be quick on this. We've very often seen, like you mentioned briefly on thematics, where people get, say, snake charmed into a theme or into a narrow basket, and then they get stuck there. What are the traditional traps that a customer should avoid while getting into say a narrower theme, and juxtaposing it to the fact that here we're looking at a much broader or diversified product?
Is there anything wrong with buying a sector or thematic fund? No, isn't there? It has a tactical part of your portfolio. But what you need to keep in mind is, I think, are you the last buyer of this theme or this idea, right? Basically, when everybody else has bought into it, are you the last buyer? Because typically that's when the performance stops. So don't get sort of taken by this past performance, last 1 year, 2 years, 3 years, this sector, this stock, this idea has been so great, let's get into it now, because then probably it's a little late. sometimes when things are tough in terms of past returns, is probably the right time to invest. Now, how do you judge that? It's always hard to do. So the easiest way to manage that is systematic investing. I think have an asset allocation, have a thought process in mind, and then be systematic about applying it. If you want to play sectors and themes, do it as a smaller part of your portfolio, and then get into sectors and themes which are not already shown their significant part of the performance here. Now you will never know. A sector which has already performed for 3 years may continue to perform for the next 3 years, right? Yeah. So you never know. So of course you can play, sort of what's called momentum, which is past performance leading to future performance. It's a great way to play the market, and it's one of the factors which has worked really well over long periods of time.
Well, the numbers are astronomical.
Fantastic. So that's, you can play that, but be aware what your theme is doing or what your sector is doing, and then make that decision. With diversified portfolios, I think that risk is much less. So you don't have to worry so much about performance of a particular theme or a sector as long as you've got a diversified portfolio. So that's the way to look at it. Similarly, when you look at for example a mid cap fund or a small cap, it could be an index or an active. It may look spectacular, but again it is carrying more risk. So be aware of the risk, and then when you're buying, and then you're fine. It's not to say that you cannot take risk. Obviously, when you're buying equities, you are taking risk for expected higher returns.
Yep.
Right? That is par for the course. That's absolutely what we're going for. But just be aware of the risk and take positions accordingly.
Right. I think maybe one of the final questions for today, but if an investor were just to see this as a clip, right? What is the one reason an investor should consider investing in Axis, BSE, India, Sector Leaders Index Fund?
Great. I can't give you one answer, okay? It'll have to be a couple. Firstly, I think the index construction is very interesting. It is very different from most other indices in the market, because most indices are constituted based on market cap. Here, you do have market cap, but because of the way the index is created, you are ensuring that all the 21 sectors have reasonable representation in the index. It's not biased towards any one sector. As I mentioned before, in a Nifty or a 500 index, just the financial services is 30-35%. So 1/3 of your money is already blocked in one sector. So only 2/3 which are working in other sectors. So that diversification itself is a starting point. That's one part which I really like about this. Step 2 is identification of sector leaders, up to 3 stocks per sector, which also means that you're not really buying the smaller companies.
Yep.
More than 80% of the weight in this index is large cap. So you're biasing, even though you're going and buying non-traditional names and sectors as compared to a large cap index, you're still staying closer to the large cap side, which means you're still staying relatively on a balanced risk profile. You're not taking aggressive risks in this fund. I think these are the 2 points. So I can't give you one answer, but I think I'll give you two reasons why I think this index appeals to me.
Right. So I think you've answered. I think we've covered a whole gamut. Maybe the last question for today, I promise, is why should an investor consider investing in, say, our version of this fund? Why Axis, BSE India, Sector Leaders? We have a higher quality approach when we work at Axis. So if you could just help our investors understand why Axis.
So I think this fits into the style. If you look at our overall style, we are biased towards large cap, we are biased towards higher quality, we are biased towards leadership in all of our active equity funds also. So in that sense, it feels right at home for us from our own style or the philosophy. But having said that, in the passive space, we are not saying that we know everything. I mean, the idea of doing passives is that we are going with the market, right? We're going with the index, where we are saying that we're going with a certain formula and we will apply that rather than applying a fundamental overlay or a judgment overlay on top of that. I think that's also important, that at Axis, we have launched a series of passive funds over the last few years. And we want to offer both active and passive to our investors. We don't want to stick ourselves only to the active side, only to the passive side. We want to make sure that we have a basket, and that investors who want specific investment approaches should have that investment option with us. I think that's the approach we're going for.
Yeah, I think just adding on to what Shiva said, this is going to be, I think, our 39th or our 40th passive fund that we brought out, and I think we've done a passive fund every 2 months in the last 24 months. So probably just goes to show how we are taking this category very seriously, and we hope to bring a gamut of products to our investors. So if like we say at Axis, fill it, shut it, forget it when it comes to an index fund. So we hope to come back soon and give you another opportunity to explore another index. So thank you, Shiva. Thank you for your time.
Thank you, Sid. And I hope this makes a lot of sense. We, of course, want all of you to reach out to us if you have any questions, queries. We are always happy to help.
Yeah. Thank you, Shiva.
Thank you.
Mutual fund investments are subject to market risks. Read all scheme-related documents carefully.